Sarvendra is with us. Ambareesh Baliga is joining us right now as well. By the way, the market is up 50 points now. So, it's very close to a new high. Ambareesh, good morning. Good to see you.
Good morning.
I just want to put out some data. I don't know if you've got a TV screen, but you sure can hear me. We ran a very simple screen on the CNX 500 list of stocks just to see what stocks have done from the 52-week lows and how far away they are from their all-time high levels, right?
Right.
So let's just stick with so let's just start with this. CNX 500 was the universe. 262 stocks, that's about 50% of the CNX 500 index, is up 100% from their respective 52-week lows. 20 stocks have gained over 300% from their 52-week lows. That's about 4 times or so. And 9 stocks in the CNX 500 index are up about 5 times from 52-week lows. Now, from life highs, for the same basket, 130 stocks are within 10% of their lifetime highs. That's about 26% of the CNX 500 stocks are within 10% of their lifetime highs. Another 25% are within 10 to 30% of their life highs. 0 to 30 is basically about 51% of CNX 500 universe of stocks is within 30% of their lifetime highs. And 163 stocks are more than 50% away from their lifetime highs as well. Now to stocks. Take a look at, you could do this exercise by looking at peak multiples as well, but we just chose to look at absolute prices. It's a simpler way, and I think it also puts into stark contrast what has happened. So there are a lot of names, but I just want to highlight a few, and then we'll bring Ambareesh and Avinash and Sarvendra in for comments. Orbit Corp is up 150% from its year low. How far away is it from its life high? 95% still. Unitech is down 180% from its low. This is as of yesterday's close. It's about 94% away from its life high. Bajaj Hindustan is up 140% from its lows. 52-week lows, not all-time lows. But it's still 94% away. Suzlon is up, I think, 400%. That's about 5 times or so. Its stock's up 5 times. It's still down 94% away, from its life high. Punj Lloyd, 126 from its low, 93% from high. IVRCL, 3 times almost. The stock has become still 80% away from its high. Avan Offshore is up 100. It's still 90% away from low highs. Lanco, IBREL, same kind of numbers. And it's a long list. Patel Engineering, for example, it's up nearly 4 times. It's still 80% off its high. NCC, it's up 5 times. 300 so about 400%. That's about 5 times. But still 80% away from its high. Reliance Capital is doubled, more than doubled actually, though it's still 80% from its highs. Actually, we've got about 40 names here, so we'll sort of keep rotating these names. It's just interesting to see what they've done, and I'm not saying where they can go. That's not the intent of this discussion, but it just kind of puts things into perspective. Because if you're saying, well, good days are back and the economy will get to where it was a few years back, etc., etc., some of these names, not all, some of these names still have a long, long way to go. Ambareesh, come in on this. I mean, some of this data that we're putting out, how would you look at it? And I'm sure the market is not being very discerning. It's not going into each stock and saying, well, what are the prospects of this company? What are the cash flows? Let's go meet the management. It's happening in some names, but it's not a widespread phenomenon. What we are seeing broadly is a rising tide kind of lifting all boats.
Absolutely. I mean, this is what happens in euphoria. You don't really go which have not moved and start buying those. And today we have reached a scenario where when you pick up any stock on the street, it's only a question of whether you'll make a large profit or whether you'll make a small profit. The question of loss does not arise right now because everything is moving up. And like I said, this is exactly what happens in euphoria. And the data which are given saying that some of these stocks have gone up some 3 or 4 times in the past couple of weeks, but are still about 90-95% down from their 52-week highs, I don't think that should be the right way to even look at any of these stocks, because their balance sheet position was completely different. When they were at the lifetime highs, the environment was different. Their ability to raise capital was much better at a high premium. For example, something like sugar stocks. I mean, you had seen lifetime highs about 5 or 6 years back when they had increased. When you had the sugar prices actually doubling, you had huge inventory. They made huge inventory profits. The whole environment was looking good. Today, in this sort of a scenario, I mean, it's possible that the sugar stocks can move up some more, but can they be possibly 10 baggers, 15 baggers from here? I don't think so.
Yeah, no, it's not the right way to look at it. That's exactly why we are looking at this like this, Ambareesh. As you said, it's euphoria. I mean, the collective wisdom of the market is telling us something, right? And we can't shy away from that. We can not
Absolutely,
participate, but the collective wisdom is saying that some of the things you mentioned, right? The financial shape will look was very different. The market is saying, well, it will look very different from what it is right now. The ability to raise funds. I think that was a big reason why it was a virtuous cycle, right? Stocks went up, companies could raise more money, markets, gave them higher P multiples. Stocks went up even more, and companies said, well, we'll expand more. The market collectively, I guess, is saying that will come back. That's what it is saying. That's what it is telling us.
So that's true to us.
Yeah.
Yeah, I mean, that's true to a certain extent, but that does not mean that all the stocks in the basket will, perform similarly. For example, if you are seeing, and clearly we are seeing an infrastructure bounce back, no doubt. But then in that sort of a scenario, you will clearly have someone like a Larsen & Toubro possibly getting the maximum benefit, and may not be someone like possibly a IVRCL or maybe a Punj Lloyd. I don't think they will get the similar sort of an advantage which L&T would be getting. So there is no reason why a Punj Lloyd can become a 3 or a 4 bagger from here. But it is very much possible that something like a Larsen & Toubro can double possibly in the next 2 to 2.5 years. Again, to give you an example, talking of stocks which were, very high in the boom period of 2000, 2001. For example, something like a Himachal. You really can't say that it is currently quoting at a 99% discount to the lifetime high, which we saw in 2000, 2001 of closer to about 2,000 rupees. That should not be the reason to look at Himachal. It is very much possible that a stock like this can disappear over the next 4 or 5 years.
No, by the way, Himachal was the first name which came up on our Excel sheet when we ran the screen. We have not included it, obviously, for obvious reasons. We actually chose to exclude a lot of reasons. We've just included, stocks from the infrastructure space because, that's getting a lot of attention. And stocks which were popular in the last bull market, right? And which lost massively because of whatever reasons, XYZ reasons. But obviously, we've excluded a lot of names like the one you mentioned, Himachal, which got to whatever 2,000 to 2,500 or so. You want to come in, Avinash, on some of these numbers?
I think, Prashant, clearly, I would also like to second what Ambareesh says, that, from the highs of the previous levels to compare these stocks would not make any relevance, because stocks like Punj Lloyd or for that reason an Orbit Corporation, I think clearly in these kind of market it is now getting more and more tougher and actually sift through quality, because I think everything and anything now is moving up, and now we have been hearing that Suzlon would possibly demerge its business and possibly some big IPO is coming. So I think now stories are going around that possibly we could see Suzlon at 100 odd level. So whenever these kind of stories do keep coming, I think that is a time when you need to exercise caution and stick to quality. Within the mid caps, I would say there is definitely good scope to make money on good quality run companies. But I think as the saying says, in a bull market, I think when the tide turns, I think you'll see everything going up. I think that is when you need to take a little caution. At the end of the day, you never know when the market would top out or where there could be a sellout. So my sense is, I think, stick to quality, and I think getting into penny stocks would obviously make people look it to be a very attractive proposition now. But we have seen in the past also that you tend to lose your entire capital in these kind of stocks.
Yeah. Either Avinash, both you and Ambareesh are the sanest guys in the room. or I don't know, because a lot of these names, I can tell you, a lot of these names, people have come on this program, and I'm sure, both of you would also have recommendations on some of these names, right? Not all are penny stocks, not all are bad stocks. A lot of people have come and said, well, bet on this. When you put the numbers like this, and that's essentially the purpose of putting these numbers out, that stocks are up 2, 3, 5 times, but they're still 90% off their previous peaks. I think that brings into stark contrast, what has happened to these names and where they were. And the move might seem enormous, but I think that's just looking at the last couple of weeks. But if you take a look at the last 6 or 7 years, the last bull market levels, I think that gives us some context. That's essentially was the exercise of doing this. Sarvendra wants to come in. Sarvendra.
Yeah, Prashant, I would like to add to the data that you have pointed. See, one thing that clearly comes out from the data is that whatever negative sentiments we had carried for the last 4-5 years, those sentiments are over. So, first and foremost, that's important. So, which means now, for everyone, the market is a buy on decline. So, that itself is a good supporting kind of a theme for the oncoming bull market. But I would like to make a point here that any small or big bull market has got 5 legs to it, essentially 5 set of waves to it. So the first leg which is up, then you have a wave 2 correction, then again you have a third leg which is up, then you have a wave 4 correction, and then the final fifth comes. So within the first set of move, I think this is kind of a mini euphoria is what I can see, because yesterday also I was going through the entire historical data between Sensex, the mid cap and the small cap index, and there has been no single instance where such kind of an outperformance has not got punished in the near future. So this rally can continue for another 15 days, 1 month, 2 months, but you will definitely kind of give a wave 2 correction. This would give way to a decent bit of correction. The only thing is that we need to put a pulse when it is coming. So right now, if we take out 7563, then that correction gets postponed for the future. But again, I will like to remind viewers that this is an even year, and second half of even years over the last couple of occasions that we have, and in fact the entire history, even years from the top, the Nifty has on an average given 25% corrections. Usually over the last 10 odd years, 3 instances have happened in the second half. When we were in early 90s, it was more to happen in the first half by June. So I don't know. This is an even year. There is always a risk of a 25% correction. If it does not come from here, then definitely in September, October, there's a very high probability, 90%, that you will get a decent wave 2 correction. So we'll want to play it till then. But one thing is very clear from this data, that the sentiment has changed. So the basic nature of the market has changed. From a bear market, it's already a bull market. And that is what I've been saying right from 4,500, 5,000 Nifty levels, that yes, the bull market has already started. Sentiment has taken almost 2 years to change, almost 18 to 24 months to change. Now this is going to stay. It will not go into a bearish territory immediately, because it's very difficult to go from a bull case to a bear case. So this is definitely change for the next 3 to 5 years.
Good. Very brief, Sarvendra, which wave, I don't look at waves, but I mean, this certainly seems like a tsunami wave. Which wave is the tsunami wave? You said we're in phase 1? Wave 1, sorry.
Yeah, this is phase 1. Phase 3 is the biggest of the all. Right now, let me tell you, when I am a broker myself, when I talk to people, I think the guys who had already had accounts, their participation has started afresh. We still don't have new recruits coming into the system. It is the third wave which will suck in new players, new wannabes who will come and want to dabble in the markets. That's going to be the most phenomenal move of all. So that, I think, is still 9 months ahead, 9-10 months ahead. That move is still in the offing.
Very comforting words, Sarvendra. Thanks very much. Good to have you, all of you with us here. Ambareesh, Sarvendra, Avinash, appreciate your time, and thanks very much.